US stock benchmarks closed in positive territory last week, boosted by optimism around the potential coronavirus vaccine and the US reopening its economy. Wall Street is also supported by the unprecedented monetary stimulus and expectations that interest rates will stay low for years to come. The S&P 500 advanced by 0.24% to close at 2,955.45 on Friday. For the week, the index put in a weekly gain of 3.2%. US stocks keep rising despite the flood of negative economic data. US initial jobless claims reports have already shown cumulative job losses of more than 38 million since the beginning of the coronavirus crisis, while continuing jobless claims are expected to stay above 25 million. According to analysts, it looks increasingly possible that the main reason behind the market rally is associated with the expectations of low interest rates, which make stocks attractive even at high levels. Adding to market optimism, Dr. Anthony Fauci, director of the U.S. National Institute of Allergy and Infectious Diseases, said on Friday that Moderna's vaccine data looked promising. Meanwhile, Friday and Thursday's drop didn't erase the Dow's earlier gains. The Dow Jones posted a 3.3% rise for the week to close at 24,465.16 on Friday. Investors don't seem to be distracted by rising tensions between the United States and China, keeping focus on reopening the global economy and on a cure for the COVID-19 pandemic. Experts claim that the market likely sees the upside risk related to finding a vaccine or treatment as near-term, and the downside risk related to China as long-term, so investors are focusing more on the near term right now. The NASDAQ Composite climbed by 0.43% on Friday to finish at 9,324.9 on a weekly basis. The tech-heavy index posted a 3.4% gain. Meanwhile, Chevron shares were among the worst performing stocks at the end of the week. Chevron shares shed by 1.9% on Friday to end at 90.28 as a sell-off on crude oil futures won on the energy sector. For the week, the stock still posted a 1.2% gain. Crude futures dropped amid concerns over economic growth in China and growing worries of increasing trade friction between the United States and China. In the meantime, among the session's best performers was United Health Group Incorporated. The healthcare company's stock rose by 1.06% on Friday to trade at 289.94 at the close. For the week, however, it failed to notch out again, posting a 0.3% loss. Noteworthy, UNH is among the 30 most popular stocks among hedge funds. It's also good to see the share price up by 10% over the last quarter. You are watching weekly review of US stock market on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.